Well, thank you so much, guys, for joining us for this AMA. For those of you who are joining now, this is DeFi Alpha. I'm project lead at Umami Finance, and we've got CoinFlip and Fredigar from GMX here. So this has been, I know for GMX, this has been a packed week with the AMAs. You guys are doing a lot of really cool and exciting stuff for Arbitrum Odyssey. And I think that might be a good place to start. Do you guys just kind of want to brief listeners a little bit on what you're doing for Arbitrum Odyssey and how that's been going so far?
Sure. Do you want to start with that one, CoinFlip, or should I? All right, I'll go ahead. So the first plan, of course, for Arbitrum Odyssey was to introduce new users to our very powerful platform. So the Arbitrum specific task for the Odyssey are to, do the basic things that we're known for: make a swap, mint some GLP, enter a leveraged trade. But we also decided that we wanted to do some more of our own internal marketing campaigning. So we've got basically two phases that we're going to be like unraveling throughout the week. So the first phase is we really want people to, share the joy of GMX. So if you generate a referral code, you share it online, and people use it, you'll essentially get an entry for every person that uses your referral code. And then additionally, the second phase is our Amazon, our AMA Amazon. So for an AMA like this one, we'll actually be dropping Easter eggs all throughout. And then the main GMX, Twitter account will essentially tweet out a prompt, and those who are the first to answer the Easter egg or find it will be entered into win a raffle prize. So that's currently one Blueberry NFT for the first place, and then I believe second, third, and fourth place are essentially series of GMX bundles. So yeah, we're excited to be here, and thank you for hosting us.
Yeah, and that's a really good overview, and I think I was remiss to maybe not ask you guys just to share sort of a general overview of GMX. That might be good, just given that this is sort of Arbitrum Odyssey week, and we're hopefully reaching out to some new users for the platform. So this is a good time for people to get to know the different projects. Do you guys want to maybe share just very high level sort of your role in the ecosystem, and then we can do the same for Umami?
Sure. So how I like to pitch GMX, especially to someone who's kind of wanting to move over to the Arbitrum network, is that on Arbitrum, GMX is essentially the largest on-chain perpetual and spot swap DEX. So everything is on-chain. Price feeds are decentralized Chainlink oracles. We have a really neat liquidity provision model that allows traders to essentially enter large position sizes without any, price impact. Very, very low slippage. That's all thanks to our GLP, which, of course, we could talk about later. And I mean, that's really the bones of it, is that we're on-chain and leverage DEX with this really deep liquidity and with essentially everything on-chain. So not only are the price feeds decentralized, but you can also just look on the blockchain to see what happened with your trade, what caused the liquidation or anything like that. It's all recorded.
Thanks. That's a really good overview, and I can actually speak just obviously Umami is a close partner of GMX, but I can also just speak as a user. I think for people who are new to Arbitrum, GMX is a really impressive platform for all the reasons that Fritigar said. I mean, I think for if someone was using GMX and didn't know sort of anything about the project or the chain it's on, right, they would probably assume it's a much more they might think it's a much more centralized exchange, maybe
Right.
on a more centralized L1, because the time to finality is so quick. The oracles provide such precise and up to date feeds for whatever asset that you're tracking, and again the fact that there's the leverage trading is so smooth and such low slippage. It might it's the sort of thing where someone might think that they're on maybe a synthetics exchange, but in fact this is actually happening with real underlying assets as collateral, and for the trader to receive if they come out ahead. So I think that that's something that people are going to sort of continue to appreciate more as they get to know the platform. But I'd love to just learn a little bit about sort of what led you guys. We work with you all the time, but I'm curious sort of your backstory and what led to kind of the conceptualization of GMX, and any challenges that you know maybe ran into early on trying to create something like what you have that is decentralized and is based in an L2 and not in and not an Alt L1 at least originally. I'm just curious a little more of your context on that.
I'll take that. So actually, since we're talking about since you mentioned L1s, in many ways, I would say, the seed came about from, the very first project that was sort of under the umbrella, which was called XFix, which had deployed on Ethereum mainnet, had a lot of interesting concepts around uh, token burns, methodology to sort of model out inflation, really incentive structures. And, as part of those concepts, the very, very, very first, you could say, project that came in after that, after XFix, was something we actually called X2. And what X2 was is effectively leverage tokens. Uh, they worked. They worked well. If you took one side, funding rates helped to balance. But 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 there was an issue, and that issue came down to, despite having oracles that were working supporting the system, if you didn't have enough liquidity, the system just didn't work in the end. And being on mainnet, you know, transaction costs are so prohibitively high that, you really started to look and say, well, how do you create this right trading experience where people can come and balance the positions? And that's actually where, call it, I don't want to use the word failure, but the failure of X2 is what actually um, triggered, what eventually became Gambit, which was deployed as a sort of our alpha on BSC and then moved and became GMX. It became this idea of saying there needs to be constant liquidity available for a trader to come in and to be able to take their positions. How do you make sure that that liquidity is not fragmented? So if I take you to the initial days of, a Uniswap or anything else, each pair was its own token. It existed in their own silos. Here, what we did was by bringing everything under a single pool, right? So, for example, on GMX, you've got Ethereum, BTC, Uni, Link, and a whole range of stablecoins. That entire diversified basket allows for actually even more liquidity than it seems on the surface, because the fact is that by having all those tables, I can say you can take long positions on any of these tokens. You can take short positions, and we don't need to keep the funds segregated for the ability to open those positions. So, you know, in many ways, where we've ended up was by looking at exactly those limitations.
Hmm.
Uh, and by the way, your comment about it feels like you're on a little private chain when you're on Arbitrum. I mean, what we've been able to do and what we hope to continue to be able to do would not be possible on something like Ethereum mainnet. Arbitrum, despite fully secured by drawing its security from Ethereum, but delivering this sort of DeFi friendly environment with near instant finality and low transaction costs. Today we've had I think 7,000 people open positions on GMX. Now, that's not a typical day. Arbitrum Odyssey obviously has had an impact, but we're talking NFT drop levels of activity that would cripple the Ethereum mainnet. And obviously, it's been a busy day on Arbitrum, but the chain keeps going.
Yeah, and I think you raised some really interesting points there. And I think one thing I might just in the spirit of Arbitrum Odyssey, I will use this as an opportunity for a plug. I know that part of your Easter egg hunt involves some fun facts about GMX. Might I ask what was the original version of GLP called? Now that you've given some of the backstory behind its genesis, I think Fridegar can elaborate on this, but I think that there's an Easter egg attached to that question.
Yeah, I'm glad that CoinFlip actually brought up Gambit because, like, again, Gambit is probably like the most recent iteration of what GMX is today. And one of the challenges that we did run into using Gambit was the fact that essentially our liquidity provision token, which is at the time, and this is It's a fun fact for me because I can't think of any other token that's really accomplished this. But USDG or USD Gambit was essentially the first, interest-bearing stable token on Binance Smart Chain, and that was our liquidity provision token at the time. And one of the issues that we ran into that was, if you want to have a stable coin, it needs to be over collateralized. And I'm only saying that like not because it has to, but that's just the most reasonable model right now with crypto, right? We've kind of seen the algo stables kind of run into a hiccup. So the issue is how can you both ensure that USDG is over collateralized and that enough liquidity is still there for large traders to enter their positions, do crazy leverage like 30 times or whatnot. And so the solution to that was why don't we just make it free floating instead? And so now we have something like GLP. It's not particularly pegged to anything other than the underlying assets, that's in that pool. And so, that was just one of those really great learning experiences that has now given us the very powerful tool that, we all talk about all the time, which is GLP. So, that's one of the fun facts I love sharing. USDG was the original kind of like model before, we tweaked it, improved it, and came up with GLP instead.
Very cool. And actually, now that we're sort of talking just a little bit about the backstory behind GMX, some of the stuff is stuff that I'm genuinely curious about myself. But what strikes me is you guys are only 9 months old, and if I'm correct about that, at least your current version, and the GLP pool, even now, right? And there's a fairly we're in a relatively down market, which affects the headline figure here, but there's $163 million in liquidity there. And I know, I've shared this before in other contexts that, GLP now provides the deepest, lowest slippage liquidity available for, core pairs like BTC and ETH and USDC. And that's, including liquidity on mainnet, if I'm not mistaken. That's a very rapid, accumulation of TVL, and I know that your volume is, pretty. If I'm looking at the 24-hour volume, just the past day is $48 million, and I'm curious because this is something that we run into, with our strategy at Umami is this question of, we're really bullish on Arbitrum. It's capable of doing things, as you guys have said, that just can't be done on mainnet, but it inherits mainnet security. So, we see the potential, but, drawing the deep liquidity, to the network that's needed to do, some of the things that we want to do, or other protocols might want to do, is still a perennial challenge when you're scaling, a relatively young L2. So I'm just curious, about the backstory behind how you guys attracted, as much TVL as you did, and whether that there was sort of a game plan to sort of woo TVL from mainnet, or whether that just sort of, if it was more of a if you build it, they will come dynamic, and it just sort of came on its own.
I do think there is a certain aspect of if you build it, they will come. I think there was definitely a very conscious decision made to come to Arbitrum, and for us, Arbitrum is Ethereum, right? And I think that for many other people as well, that same holds true. I mean, there are many people who you would consider ETH maxis, or just generally who draw comfort from what Ethereum is, who still aren't active on chains like Matic and other ones that you would consider L2s because they don't draw their security. You cannot theoretically derive and rebuild the chain just using what is deployed on Ethereum. And I think it is that comfort that helped when Arbitrum launched back in, I think technically it was live a little earlier, but September of last year is when it was live, let's say, to the public. I think it attracted and caught people's imagination. And we as a project had sort of because we were having RPC issues and many issues on BSC, which at that time was really sort of bursting at the seams. We took time. X worked and who's the founder and lead developer, to really make sure the protocol was well geared. And we effectively then sat on our hands for a couple of months waiting for Arbitrum to launch, because we said, if we're going to launch, we're going to have the product we want it to be where we see coming, where we see capital be. And I think Arbitrum has been able to do that. And yes, that headline number is really nice, But I think for us, what's more important is the volume and the usage, because there's countless chains that have sort of done incentive programs and had billions of TVL come across. It sits there, it takes incentives, and it moves on. Everything that you're seeing on Arbitrum is natural. There's no added incentives coming to have people come to Arbitrum. The campaign that's happening right now also, I mean, it's really about just drawing people in and letting them come and see the wonderful projects that have now spent the last 9 months building over there. So, I think from our standpoint, we were very clear that, Arbitrum is our Ethereum home, and we wanted to have a home on Ethereum.
Yeah, no, that's really helpful, and obviously you hit on a point that is dear to our hearts at Umami, which is the fact that as you're saying, the TVL that you've drawn is not in response to some sort of incentive emissions. I mean, there's a few limited incentives that I know that you guys reward long-term stakers with, but it's sort of very strategic and limited and actually impossible to dump. And most of the performance really, of the exchange itself, and then, of course, also the GMX and GLP tokens is just driven by, actual sustainable trading volume, which is, scaled. And that's a theme, and that's probably a whole other topic, that we could get into more, on another day. But, Umami is very much built around the thesis that, long term, what's going to drive, you know, continued migration of TVL, into blockchain in general, and that's going to determine, what sorts of projects and products win is going to be whether, they're based on sustainable revenue streams, and something other than the protocol token, something closer to, revenue, sort of in trad businesses. And I think you guys have really sort of taken a lead on that, and that's something, we have a similar model at Umami in that we pay out protocol revenue to our stakers in ETH. But I think that the fact that we're seeing this much TVL migration to Arbitrum and to projects like yours, even during surprisingly bad period in the market, speaks to how attractive that proposition is to holders. And maybe actually on that note, it might be worth just sharing with anyone who is learning about GMX. Do you want to share a little bit about just the GMX and GLP token model from a holder's perspective? Because that's another, major attraction to the project, I think.
Definitely. So one of the things that definitely attracted me to the GMX platform and the token itself was kind of like what you highlighted at first. It was for me, right? I was coming from platforms and protocols where the platform token was what you were compensated for participating and using that platform, right? And we're all familiar with what the very obvious problems that presents, right? If the platform wants to grow and it gets more users, meaning it emits more rewards, it's essentially going to lead to an inflation supply or a dump scenario or a combination of both. Either way, all three of those will lead to the price tanking, kind of the team scrambling to retool the token for another use, and it essentially kind of disrupts the project, and not just the project, but the people who are looking to kind of build or include that project as a part of their financial game in the crypto sphere, right? So GMX and GLP essentially are the two platform tokens. GMX is what I would consider the stakeholder token. So like if you're interested in the GMX platform, you want to have a stake in the direction it goes in, and you believe in its success, then the GMX token is probably what you're looking for. And if you're more interested in, say, yield farming is what it's traditionally called in the crypto space, but I feel like because of the tokenomic model of GMX, we're kind of moving away from the idea of yield farming and kind of more entering into this position of, say, maybe like efficient capital management. That's really what GLP is. GLP is that liquidity provision token. It earns 70% of the protocol fees on chain. I want to specify that because, of course, GMX is deployed on Arbitrum and Avalanche. So there's a GLP for Avalanche specific capital pool, and there's a GLP for the Arbitrum specific capital pool. And 70% of all the revenue generated on the Arbitrum deploy and on the Avalanche deploy go to their respective GLPs. Now, what's really cool about GMX is 30% of all revenue generated, regardless of what chain it's on, goes to GMX holders. And I think that's really what is not only powerful about it, but it really kind of draws you in and wants you as a token holder or staker to, root for the success of the platform, not just because it's something that you like or that you have a bag in it, but because it actually works. It's innovative, and the way it works is also the way that it rewards you. So it's this really cool, sustainable, kind of we're all on the same side kind of approach to a tokenomic model. And I think that it's just one of those really simple innovations that, you hear about it and you almost kind of want to wonder, why wasn't this done before? But, GMX did it, and, I'm glad to be a part of the team that's as smart and as innovative as they are. So, yeah, it's a really interesting two tokens that we have for the platform.
Mm-hmm. Yeah, and I might add, Umami is, I believe, on Arbitrum at least, if not overall, the largest GLP holder, right? The liquidity provider.
Yep, you guys are.
And I think just a few things about that particular token that I can speak to that make it very attractive, for any number of holders, is that for not only is it sort of risk hedged in the sense that it is effectively an index, and half of that index, or approximately half, is comprised of stables, right? And therefore it's considerably less volatile than majority of non-stable assets you could hold chain. But I think that this is something you guys sort of alluded to earlier. GLP, correct me if I'm wrong, has a claim on 70% of the revenues from the trading platform, and as the counterparty in trades, collects any collateral posted by traders who were liquidated, right? And one of the things, you can see this right now for people if they go on the GMX app. During periods of sort of high trading activity, or frankly, high levels of trader liquidation, which would be any period really where there's a lot of volatility in the markets, certainly during a lot of bear market circumstances, such as the one we're in now, GLP will often really outperform, right? I think that when I last checked, you guys, GLP sort of has its rewards are partially ESG emissions, so there's a little bit of an incentive token emission there, but most of it is ETH, and its APR was 24% in ETH. And one of the things that's made it very attractive to Umami is that when you're in a circumstance where there is a market downturn, particularly if it's sort of sharp and abrupt, GLP has a somewhat counter-cyclical return profile, right?
Mm-hmm. Very muted.
Profile. Yeah, it does. It tends to perform very well, given its claim on the trading platform. I don't know if you guys want to elaborate on that, but I thought it would be sort of worth sharing with listeners.
Yeah, so I think what you'll find is that with GLP, as you said, you have inherently a system that has a hedge built in. You're carrying stable coins, you are carrying volatile assets, you are getting a certain level of market exposure, but you're earning from fees from all of those assets being at work. That may be people doing stablecoin swaps, that may be people doing swaps between ETH and stablecoins, and obviously the biggest revenue generators, people leverage trading, open fees, close fees, and the like. So, I think one of the things that we always, it's great to be in a situation where the yield that you're earning is coming from actual activity, and is done so in a way that even now, as you mentioned, the markets may be down, but at least in volume of ETH or volume of BTC that's being traded on the platform, it's up. Mm-hmm. We continue to be growing, our volumes as a share because in the end, a lot of people may think about trading as a purely speculative activity. It may not. In many scenarios, it's not just that. Quite often, it's a combination of speculation. It's a combination of people using capital efficient nature that perpetuals provide. It's using hedging strategies. So in all cases, that activity continues to happen. And we definitely see a cycle where more and more of that activity continues to move on chain, which we believe will continue to drive utilization and usage of the platform and fees. And I think we definitely like, we're in the business, so we like the business, but being a GLP investor, you effectively get to do exactly what a market maker does. You're basically doing the exact same business that
Mm-hmm.
Jump and Alameda, so many of the big players do, which is make markets and earn those pieces. That's what GLP gives you back as a return for doing the exact same process.
Yeah,
And
that's really. Go ahead.
sorry, I was just going to add, because now I was thinking a little bit more about the way you asked your question. I mean, another thing that's cool about, GLP is it is a muted asset, because in another way, I like to kind of test out this pitch because it's interesting, is for those who might be looking for a native crypto kind of ETF or like index.
Mm-hmm.
As far as I know, GLP is essentially the closest thing to an on-chain crypto ETF or index, right? It's a combination of these large blue chips. For Arbitrum, I believe it's Bitcoin, Ethereum, Uni, and Link, right? And then about 50 or let me actually check the dashboard right now. Give me 1 second. So it's about 48% stables, right? And that essentially shows you, it gives you that market exposure and you're earning at the same exact time. So another way to think about GLP, if this is something you've been looking for, is a crypto index as well.
Mm-hmm. And actually, now I might be moving into sort of seeing if you guys will share any alpha with listeners, and these are things I'm genuinely curious about as well. I mean, my understanding is that over time the GLP pool will expand and diversify into additional assets. I've heard different ideas floated as to what other core crypto assets could be added to the pool, in the near term. I've heard CRV, for example, and I'd be curious to. I could imagine others being a fit as well. But do you guys have anything you can share in terms of sort of longer term, the breakdown of assets in the GLP pool, and whether your goal is to have something sort of very, very diversified?
So, so I think the answer is twofold. I think that within GLP itself and the way that GLP is constructed, uh, you know, being a platform that is backed by the assets that are being traded, we look to have we look to have a situation where the assets that are added are the most blue chip assets, both from the perspective of holding them as a liquidity provider, but also from the perspective of the safety and security of the platform. Uh, in terms of we work by replicating and reflecting deep trading markets on centralized and other exchanges, and to do so, you really need tokens that have that depth of volume. So
Mm.
while we may potentially continue to grow GLP a little wider, it's a safe bet to say that the most immediate additions that you'll see would be top 10 tokens where it's possible.
Okay.
So there's tokens, for example, like I'll use an example. Sol is generally speaking on most weeks the third most traded perp product, within the wider perpetuals market, and including on centralized exchanges. It's just that Sol is not bridged in any material quantity to Arbitrum, so it's difficult to add it to something the size of GLP and to do so in a meaningful fashion. BNB is the next most traded, likewise, not readily available on Arbitrum. So, but I think we are continuing to have conversations. We want to obviously gauge what are the assets that our community wants to trade, the traders want to trade, because as you said, you're looking to hold blue chip assets, but you're also looking at assets that will have value forever, because that is enabling. So I think that's what you're going to see on one side. Now, further though, I think we have released information about our synth platform that we're working on,
Mm-hmm.
and there I think you will see a much wider set of assets, because we start to look at other economic parameters for how you keep markets in balance. Some are concepts that others have worked with. Some are concepts that we're taking and further adapting. And sort of like the way we brought about with GLP, we're trying to do something different on the synth side. And there, potentially, you could see, even permissionless markets be able to come
Mm-hmm.
up, supported by oracles, and then select assets, further backstopped by, a large liquidity pool, um, in the nature of a GLP,
Mm.
but probably something a little different.
Okay.
So, I think what you'll see is that there's not necessarily a one size that fits all for, I think for the trading experience that you get with, I'll say the two flagships, ETH and BTC. We think GLP provides you know, an unparalleled experience, and from a liquidity pool standpoint, it is very compelling for people to take a relatively low risk approach to providing liquidity while being in those specific assets. And I think that is a very large pool of investors who like that type of exposure, which I guess the size of GLP is a reflection of.
Yeah, no, that's really helpful. And I think maybe the last thing I'll flag, and then we can pivot and cover a little bit about Umami's vault, which also connects very closely to GMX. But I think the last thing I'd be curious to hear more about from you guys. I know that as you alluded to, you have a new product coming out, relatively soon. I don't know the exact timeline, but this synthetics platform, and also described, a PVP AMM that wouldn't rely on the GLP pool as liquidity, but would actually match traders to traders, and there might be some liquidity provider role if I understand it properly, but that's not necessary for the functioning of that product, and that will be rolling out sort of simultaneous to a trend that we're just seeing with your existing platform, which is more and more spot trades being routed, um, you know, usually by DEX aggregators through GLP because of the really deep liquidity that we've been talking about. So just curious, sort of in the future, say 6 months down the line for GMX, do you still see yourselves, primarily being driven by revenues from leveraged perps, or does this become sort of largely just sort of a general play on trading, including a lot of spot trading on Arbitrum, with revenues from both the PVP AMM and then also trades through GLP that use GLP liquidity.
So I think the answer would be that time will tell. It is conceivable that the PvP platform can also take up a lot of the activity that we currently do under GLP. So we're not trying to pick sides. But what we do want to do is roll these products out and make sure that they are available in the market. I would say that the commitment that our team has made is that as we continue to build projects, protocols, extensions, work with others, we want to do that all under the GMX token. So be it what we're doing with Synth PvP, what we're doing with potentially X4, which is an AMM that we would like to continue to develop. They all fit together. They're all building blocks. Even now, and I think maybe it's a very you mentioned we should talk about the Umami Vault. I mean, we view what we're doing with you as exactly an example of that. How do we make sure that this that the base where we've created is a building block for others to keep building, right? That
Right.
can be a whole range of vault strategies. That can be trading strategies, hedging strategies. We've got collaborations with options platforms. All of that is about stitching together a DeFi ecosystem. And a capital efficient trading model is, we feel, a key part of that. And so we're going to keep working on capital efficient solutions, both for traders and for liquidity providers, where you get high volume flowing through the capital that you're providing, and thereby you're earning a healthy return from liquidity provision.
Yeah, it's funny. I mean, I think you guys have done such a good job of identifying some of the key needs within the ecosystem, particularly with respect to trading liquidity, that the biggest one of the biggest concerns that we have on our end, it's not really a concern, but it's the open questions, is how are we going to diversify beyond GMX, right, as sort of a primary underlying source of yield, right? Because as you guys just continue to scale your trading platform and layer on things like PVP AMM and X4, and draw in more liquidity to GLP and maybe some other liquidity pools, we run into the situation where the vaults that we are focusing on building around GMX are just so scalable, right? Because you guys already have that sort of critical mass and are building on top of it. So that's me really just saying that we're very bullish on you guys, and it'll be we almost want to see a few real competitors come into the space just so that we're not so heavily concentrated on GMX, just to answer questions that we get about diversification. But I'm saying that playfully, of course, because you guys are just doing a fantastic job in the ecosystem.
I think it's an interesting thing. Obviously we speak with you. We even speak with other perp or synthetic platforms that are coming to Arbitrum, and we're happy. I mean, listen, we believe that a more robust ecosystem will bring more people in, and create more opportunities for everyone. And so we welcome everyone. I mean, I don't know how
Yeah.
else to put it.
Yep. And so, is there anything you guys wanted to sort of ask Umami, about our vaults or about anything else? If not, I can, share some things, but I'd, rather kind of hand the mic to you guys.
If I wanted to kind of ask, I know, so much of what we were talking about was about GMX and kind of like where we were coming from. I mean, one thing I always thought was incredibly impressive about Umami Finance was the really careful job that you guys did kind of turning away from the original kind of
Mm-hmm.
fork model that you guys were working on as like Z2O originally. So if you can kind of give us some of that interesting insight as like maybe not like a developer, but kind of more entering into a project that's already kind of been deployed, and more importantly, saving it from, what was this really interesting narrative collapse that we saw happening.
Yeah. No, thank you for asking that. I think that there is some interesting backstory there. So, yeah, I mean, I joined just as a contributor to a project called 02 Ohm, which was it really was it was our predecessor. That project had launched, as you said, during sort of peak ohm fork frenzy, and for those of you who aren't familiar with that. Basically, this project Olympus DAO was enormously successful on mainnet, and there were probably at the peak of this, probably 36 projects doing, essentially a similar tokenomics model on, basically every chain. One thing that was a little bit unique about 02 Ohm was that it was really the only such project on Arbitrum. And, for those who aren't familiar with, the sort of Ohm fork or Olympus DAO model, what that really means is that the projects focus on raising enormous amounts of protocol and liquidity by, in essence, sort of heavily incentivizing the provision of that liquidity through emissions of their native token. And frankly, for me at least, the writing was on the wall pretty early on, because it was clear that this kind of tokenomics model was unsustainable. The market, had come to there was this competition between projects for the highest possible APY, and the figures got into the millions APY from token emissions. Obviously, eventually the inflationary effect of that caught up with those projects, and most of them went underwater. But again, the key thing for 02 Ohm, which at that point actually had already rebranded as Umami Finance, was that it had raised a considerable amount of protocol and liquidity on Arbitrum, and was the only such project to have done that. And as we've been talking about, Arbitrum's very, very promising ecosystem. GMX has done an incredible job of attracting liquidity to their platform, but overall, it's an ecosystem where the amount of sort of innovation and the depth of the variety of DeFi projects that are on Arbitrum has kind of outpaced the availability of liquidity to stand up those markets. And so that was sort of a key observation that the team had made after sort of that initial Ohm fork phase. And in a sense, we were lucky, because the collapse of Ohm fork tokenomics and our the drop in our price of our token kind of forced some serious changes to the protocol. There was a big turnover in the team. I took over as project lead, and to be perfectly honest, at the time, this would have been late January, that that I was taking over, and sort of the team was being reconstituted, we didn't necessarily have one specific course of action that we were committed to doing, but we had sort of done an internal review of our advantages, and being on Arbitrum, having already built a lot of partnerships, having protocol loan liquidity, and sort of having really identified a number of liquidity gaps on the network, and the potential to earn real revenue, which kind of goes back to what we were talking about earlier, were all key. And we also recognize that in the fallout of the Ohm fork period, that just really highlighted again what we were discussing earlier in this conversation, which is that for projects to really survive and to provide sustainable returns to holders and to attract more capital, including institutional capital, they need to have a model that allows token holders to get a claim on protocol revenue. It's not just unsustainable inflationary. So we
Got it.
did, yeah. So we added that to our Umami token, so that Umami stakers would receive a cut of protocol revenue through ETH. We immediately started deploying our protocol loan liquidity, around the network to places where we had the potential to generate as much actual revenue as liquidity providers as possible, and ended up being the case that a lot of that was to GLP. And from there, that's when we really started focusing on a product strategy, and that kind of takes us where we are now, with the USDC vault that we're going to be launching imminently, and the several other vaults that are also in the pipeline, which I'm happy to talk about.
No, thank you for that insight.
Mm-hmm.
I was going to say, if you actually go back to, Olympus was obviously, a phenomenon of its own, but in reality, the approach was protocol and liquidity as a way to generate a treasury to then move projects forward. And you're right.
Mm-hmm.
Most own forex never even conceived to understand that you need a project.
Right.
Raising money, you're just raising money. That's like an ICO or anything else. But yeah, I mean, I think the way that you've transitioned and taken that capital and and said, let's use that capital and use that as muscle to enter and be able to create products and use our capital to be able to see those products. Was very much the right approach, and I think I give a lot of credit to saying to not squandering that opportunity, because there were so many that just they obviously had no conception of what comes next. And you're right, maybe that's what the original team here also was, but it's been a pleasure working with you guys, because we're constantly able to see how you're thinking about things, and it's refreshing.
I really appreciate that. And yeah, I mean, maybe just to sort of add to kind of the observations that we made through that transition, I think we've talked about this just in our own discussions. We not only we not only decided that we need to sort of commit to allocating this protocol and liquidity in a way that generates revenue, but we've also very quickly realized that we don't want protocol loan liquidity to be the primary driver of revenue. And you'll observe, and this isn't to criticize any other project, but you'll observe different Ohm forks have sort of adjusted. There's course corrected to different degrees, but many of them still rely on raising and allocating protocol loan liquidity as their primary value driver. And if you notice with Umami, we stopped even really foregrounding metrics for the performance of our treasury. And that's by design. We're going to have a comprehensive dashboard coming out from Multifarm soon, so that data will be available. But one of the things that we learned from sort of this entire Ohm fork experiment is that there is a place for protocol and liquidity. There's nothing inherently wrong with sort of the bonding mechanism unto itself that Olympus DAO developed to raise fully owned treasury capital. But it really is most valuable when it is performing a support function for some kind of other products that are not that don't involve directly allocating your treasury assets. And that's because, and this kind of gets into our vault strategy now, there's a lot of value to be created on chain through effectively market segmentation, right? So if you can create strategies that are very tailored to the use cases of a particular subset of holders, whether it's some institutional capital wants sort of VC like exposure, some wants you know very stable delta neutral yield, some really wants to have more allocation, more exposure to the performance of ETH and BTC, but they want to get as much yield as they can from those holdings while they're in their portfolio. That's obviously that's just not something you can do if you're just relying on kind of a smorgasbord of treasury assets. But if you have independent vaults tailored to those strategies, that's when having that protocol owned liquidity can then really start to be of meaningful value, because you can use that to play a supporting function, right, for other products and to help stand up markets, to create liquidity in a very stable way where you don't need to rely on emissions incentives to get people to provide liquidity. And so once we made that shift, in other words, to sort of not seeing the protocol owned liquidity itself as our central value prop, that's when we started to actually see how valuable it could be, but only in as much as it's supporting an actual business model with other DeFi products.
As you said, I mean, I think it's by breaking free from the shackles of what's your backing price, what's your backing price. I mean, in many ways it was actually one of the negative parts of the
Totally.
own cycle, was that most projects don't have a treasury and are valued at what they're going to do. And if you were and you had a treasury, it didn't matter what you were going to do. You could only be worth your
Totally.
your backing. So yeah, no, I mean, I think, but I mean, since we're talking about it, I mean, in some ways, I think the vault that you're now about to deploy kind of mimics the sort of the investment strategy
That's right.
that you've done during the last few months as well.
Yeah, and I that's a very good point, right? And I think, to be honest, I think that our original concept for the vault emerged from our discussions, yours and mine, CoinFlip, early on during Umami's pivot. And yeah, I think I was sort of alluding to that earlier when I said that you can't effectively market segment and provide the right product for the right subset of users if you're just relying on protocol owned liquidity, right? And it made sense over time to recognize that we're going to optimize our treasury allocations, right, for our own strategic goals, right? We want to cover OpEx, we want to have exposure to Arbitrum because we're obviously bullish on it. We want to provide liquidity to certain tokens that it's important for us to have deep liquidity for. But sort of, as you said, that exposure that we had to GLP, which really has been the foundation of our treasury management strategy sort of since this pivot that we've been talking about. And then the hedging that we used on Tracer, right, which we haven't really gotten into in this discussion, but Tracer DAO is another incredible Arbitrum project that has a very unique product called perpetual pools that allow you to take levered long or short exposure on a token without ever risking liquidation, which is pretty unique and highly appealing for sort of risk averse protocol treasuries like us, right? But also potentially many other sort of long-term, sort of more yield-oriented investors. And so, what we realized is it makes a lot of sense to kind of strip this strategy out of the context of our treasury. It's working for us very well, but allow it to just be a very focused play on maximizing yield through exposure to GLP, while minimizing exposure to market volatility, so much so that the vault that we're launching now is delta neutral. So it's very carefully calibrated. Every 24 hours we adjust our hedges on Tracer to maintain as close to perfect delta neutrality as possible, and that enables people to just deposit USDC and collect yield effectively it is sourced from the GMX platform, because the deposit USDC mints GLP as well as the tracer hedges. And although the yield is in ETH, obviously from GLP or from GMX, there's very deep liquidity between ETH and USDC. So the depositors deposit USDC and then they withdraw their deposited USDC plus all of their returns. It's usually targeting 20% APR or higher, also in USDC, which is pretty unique product. That again, what we quickly realized after sort of developing it and doing some business development around it, that it's very in line with, I think, a lot of institutional capital is attracted to on chain. They see that there are very high yields to be had, far above what you can get in say Treasury, U.S. Treasuries, or any sort of TradFi market. But they're risk off, and so something that is just USDC in, USDC out is quite appealing. So we're excited to sort of see what effect that has in helping kind of bring perhaps more conservative, capital, but potentially a lot of it to Arbitrum.
Yeah, that stablecoin vault is going to be exciting.
Yeah, I mean, is there anything else that you guys want to ask about Umami, or just sort of flag as to share with listeners?
Well, I think one thing, since we were talking about it, which is, as I said, we've got, obviously we're working with you. Tracer is also part of this. Are there any other protocols on Arbitrum that you guys are talking with, discussing? Because I think for us and for everyone, this week and the next few weeks is really about highlighting the Arbitrum ecosystem. Is there anything else you'd like to?
That's a great question. Yeah, I mean, first of all, there are a lot of other exchanges of various forms that are either native to Arbitrum or migrating to Arbitrum that we're in talks with, that we're excited to work with. I can name, just off the top of my head, we've been chatting with a group called Gains Network on Polygon that's in the process of migrating to Arbitrum. We've been chatting with Dairy as well, which is cross-chain but setting up on Arbitrum too. And I think that there's going to be a lot of I think that given some of the features we talked about with Arbitrum earlier in this conversation, the fact that it inherits mainnet security but is so much faster with far lower gas fees, it's going to be probably the central hub for a lot of DeFi trading activities. So any project that is developing any kind of trading platform on the network is a very natural fit for what we do, since that's an opportunity for us to allocate liquidity at scale and generate yield. And beyond that, obviously, there's a lot of core Arbitrum native projects that we're just we've always been very close with. We're going to be launching alongside this USDC vault a suite of what we call super stakers, which are sort of specialized auto compounders that don't generate cell pressure on the project's native token for DOPEX and Jones. So basically, that's we're always keen to find ways to collaborate with those guys. But for now, it's going to probably just be to start these super stakers that kind of give enhanced performance to their farms. I think longer term, we are very interested in kind of diversifying our sources of yield beyond just exchange liquidity into some of the other sort of major DeFi project categories on Arbitrum. So we are interested in providing options liquidity, right? Since there's a number of great options protocols like DOPEX, Premia, et cetera, on Arbitrum, and then also looking at bridges as well as an area where there could be opportunities to build some vault strategies. So that's kind of a very general overview, but to be honest, lately we're so focused on this upcoming vault and then several other vaults that all do kind of leverage GMX and Tracer. That's where our head has been lately.
Great to hear. As we said, yeah, I mean, we know there's a lot of other protocols coming, and it's going to be a robust ecosystem all around us.
It is. Great. Well, hey guys, anything else that you want to flag on your end? I think we're just about at the hour.
No, I mean, this has been a great AMA. We've learned a lot about the journey that Umami's been on. I hope, the audience has learned, especially the newcomers, have learned a lot about GMX and where we're headed. And
Hmm.
also our fun facts, which will be the Easter egg prompt will be dropped shortly after this AMA. So be sure to check that out and answer, ideally correctly, if you want to win. And yeah, we're just really looking forward to seeing, what kind of capital that vault can attract, because I'm suspecting a lot. So I'm
It'll be a
excited.
lot. Yeah. All right. Thanks so much, guys. Really great catching up with you, and we'll talk soon.
Awesome. Thank you.
Yep. Bye bye.
Take care.